Yo, Dbloc, you there?
Yeah, he just stepped away for a little bit. He'll be back.
Yeah, it looked like he had an issue going with the stream. I was just gonna help him out if he was stuck on something there, because it looks like there's a lot of new streams created. Dbloc, with your if you're listening, with your live streams, do you manage them from YouTube's live dashboard?
I'm back, y'all. I'm just on the side doing some work. Just to catch up to Bitcoin price action. Put in a bigger W on the 15-minute. Right, we started this party with our small W on the 5-minute. As soon as we broke that W is when we had our first assassination attempt, right? Came down, took profit, found our lows where we were supposed to, down at that last vector gap that was down there. Put in a nicer size W now. Then validation is at 823. And on the break of our second W, we got our second assassination attempt, which was very lackluster, by the way. Throwing that out there if CBB is listening. That was horrible. But the pattern, like I said, take everything else aside. Forget about the whales. Forget about all that other bullshit. Just, we've got a W pattern. Breakout takes us into the middle of that last CME gap. And just so happens to clear that whale if he's still sitting there. We're on the retest of that break now. W pattern, breakout, retest, continuation is what we're waiting for.
Yo, what up?
Not a whole hell of a lot. Just trying to catch up on some Twitter buzz. What are you up to?
I just saw on Twitter the clip of Elon talking about the magic money computers. Did you see that?
I saw a little clip of it earlier, but I haven't watched the whole thing.
Yeah, I didn't watch the whole thing either, but it's funny if you think that they call Bitcoin the magic internet money and then they got computers just creating billions out of thin air.
We live in a time where you can turn energy into currency. It's true.
This whole whale thing smells like a psyop to me.
It, to me, since it didn't motivate any counter direction, it's just like a side. It's like a side quest. You know what I mean? Like, we were still going in this direction. We were still trading in this direction. Just adds a little bit of spice and a little bit of what if. The most actionable piece of information is if he does get clipped, then that's a $500 million market order that has to come in to cover those shorts. Other than that, you know, just fun, just fodder for some conversation. That too, got a lot of people used to watching whale wallets. A lot of people are digging in deeper than they have before. So just picking up new skills.
Yeah, that's cool. I've been looking more into the whole tick volume thing, and what I don't really understand is the difference between usual, like the volume indicators and the tick volume, because if you have the normal volume bars and the tick volume bars, they're usually the same, right?
There is a volume suite that you can get that will color the volume bars a vector when it coincides to a vector. But not every large volume bar is a vector bar, right? You can have large volume spikes that aren't vectors, and you can have very small volume that happens to be a vector. Watch, I'll show you. Let me, if I can remember what it's called. Hold on.
I think it's the PVSRA. Is that the one you mean?
No, it is. You want to go to, just put in Traders Reality, and there is this one right here. The PVSRA volume suite. You click that, it should. So now you're getting the volume bars, but you're also getting the corresponding tick volume. So it lets you know which one of these volume bars is actually followed by tick volume. The reason I don't use it is because if you just look up on the chart, the candle right above it will be a vector. You know what I mean?
So the only thing it says about the tick volume is the color. The size of the bar doesn't say anything about the tick volume.
No, the
Is that
color
correct?
is what's important. This small candle here still has 200% the tick volume of the last. I'll give you a good example.
Okay.
I'm trying to find a
So
small. Okay, so this one right here has 150% of the last 10, including this large volume. There's more
yeah,
tick volume in this candle than there was in this candle.
yeah, that makes sense. So like to get more into the difference. So let's say one candle is a very large candle, but it's not a vector candle. That means the tick volume is not as high as a vector candle, and that means it's less transactions. So let's say you have two candles which are the same size because they both transacted, let's say, $100 million. So if one of them is a vector candle, that could be like millions of small orders, which changes the price more times, which increases tick volume. And then if you have like one huge $100 million order, it wouldn't have a high tick volume. Is that correct?
It wouldn't. Well, yeah, because it's less orders within the candle. So a higher amount of small matched orders would have higher tick volume, but it is cumulative, right? So if the price moves 10K, then that candle is going to have massive tick volume.
So it's most
right?
of the
Because
time
it
going to
ticked
be
all the way.
candle.
But you can also have a small candle that moved up, down, up, down, up, down, up, down, up, down, and has massive tick volume.
So how do you have big candles that are not vector candles?
Because they weren't matched. They're retail candles, right? So even
Oh, they
though
bought off the book. Is that the difference?
yeah, well, that and market maker didn't match, right? So what makes the tick volume double is market maker matching the trade. So you've got a dual directional trade, a long and a short, for the same amount of price. So the fluctuations that you see with the spot buys that they do like that will drop and raise the candle, right? It'll be really big drops and raises, like really big flicks. You ever notice when you're watching a
if you
candle and it's
zoom in
about to
on,
take
like,
off, it just starts to like, you get that little twitchiness in the candle?
Yeah. Yeah, if you zoom in on like a microsecond level, you'd see it go up and down a lot of times. And the big one, the non-vector one would just go up without the twitching.
Yeah. To put it simply, regular volume is for confirming trends, breakouts, reversals, that sort of thing. And then tick volume shows you the activity level, and it validates the price moves within the candle. When you don't have actual volume data, right? You don't have real-time volume data for within intercandle sort of action. It doesn't reflect trade size, right? I guess is the best way to put it.
Yeah.
A few large orders on an algorithmic trading bot can distort tick counts, but it is the evidence that market makers stepped in, right? Which is what we look at it for, right? These are the orders that are backed up and that have counter orders set.
I've also been researching more Wyckoff stuff, and I
Nice.
think it also plays along with it pretty well.
Yeah, Wyckoff is the best. Wyckoff is the closest that the old guys got to putting their finger on the market maker. They
Yeah, it's
found
just
the
not super
pattern.
actionable if you try to look for the exact pattern.
No.
It's Don't find it.
For it to, you'll find those exact patterns, but they're very few and far between, and then those get traded really heavily, right? Because they're such perfect fits. But if you understand the movement of it, right? Like how I talk about the W rise, retrace, W continuation, like that's all within Wyckoff. That's
Yeah,
what
and like the
builds the
whole
Wyckoff.
idea about liquidity and buy and sell support and, what I'm talking about.
No, I know what you mean.
Want supply and demand zones
Yeah.
and the market maker having to trigger longs to build a short position and all that stuff. I mean,
Hey,
he was
Dbloc.
talking about the composite man, right? But the
Mhm.
composite man is just
Market
the market
maker.
maker.
Liquidity provider. Yeah, the invisible hand of the market. Call it.
Hey, Dbloc. Remember you? I remember you mentioned something about, the Asian session starts at 7 p.m. Eastern time, but something really happens at 8:30, or you believe that was to
8:30
be
was
so?
8:30 is the open on regular time. We're at 7:30 now because we lost an hour. So it just fluctuates depending on if you're in daylight savings or whatever bullshit they have us doing at whatever time.
Oh, is that what it was? Because I thought.
Yeah.
Okay, because I didn't know what it was.
Yeah,
but,
daylight savings sends it forward by a little bit, by an hour.
This was like a week ago, I think, or something like that.
Yeah, it's right around where we change time.
I thought you were saying something like that's when the real activity starts or something like
Yeah,
that.
because that's when market maker comes into the office, right? That's when you switch from algo market maker running off of algo off a bot versus them sitting in front of the desk.
Is that because of the delay between, let's say, Sydney, Tokyo, and the Hong Kong session?
There's a gap. There's a gap in between. There's a small gap where the whales tend to play.
Hey, Dbloc, do you use the candle wicks for any referencing to reading the patterns?
Yeah, of course. Candle wicks let
What
you know how much buy pressure there is at any given point, or how much sell pressure, right? The fact that we wick down from this area so heavily twice, lets you know that there's plenty of people in that area that want to sell. And more importantly, at the bottom, right, when we're trying to snipe these bottoms, you want to see a nice juicy wick at the bottom. But you want price to come down and so many people to have bought it that it retraces before the candle closes. That's evidence of
a
mind
reversal,
share.
correct?
Yeah, or at least of interest. You don't want to start coming down and leaving bodies and there's no wicks and you're like, okay, this thing is gonna break down, right? There's nobody willing to buy it.
I gotcha. So the wicks actually play a big part in how you see the direction that the chart's going to move, correct?
1000%, yeah. There are occasions where I'll cut off wicks for patterns, right? Because these are just outliers, right? For the most part,
Yeah.
people that follow line charts, right? That's what they're looking at. It completely cuts there's no wicks at all. I don't like it because it's not enough information. I don't get nearly enough information about price action here, knowing that there's a sell wall there.
Yeah.
Without having
It shows you the volume and the pressure as well, correct?
Yeah.
Thank you, sir.
No problem, brother.
Would you mention about that's when the market makers want to play like a gap or something?
There's the gaps between the sessions, right? Our biggest gap is on the weekend. And then the gaps between the actual sessions during the day are times where it's easy for whales, unless they're handled beforehand, to overwhelm the algo, right? If they just flood it with a bunch of liquidity, they can really make price do whatever they want at that time because there's nobody at the sticks. How tight we get on the weekend, even when the market maker is not in control, is because of the setup. The algo wouldn't be able to keep price tight like this if we hadn't taken out the longs and the shorts, if we hadn't taken these guys out of the game. And I don't mean by wrecking them, because you can't wreck degens. You wreck degens, they just trade again. The only way you really can hold degens still is by trapping their margin. So that's what happens on the weekend trap. These guys went long, price reverses, they're stuck in a trade. These guys went short, price reverses, they're stuck in this trade. And then that leaves just regular normal traders that the algo can sort of control.
After the typical weekend trap, is it more common that there's scenario 1 where there's only trapped shorts or longs, or scenario 2 where there's nobody's trapped?
The traditional one is the one where you have both traps is the one you see more often. Once you see it start to deviate from that, you know that market maker is starting to lose his grasp a little bit. And that's what we look for. Like, I don't draw these weekend traps because I want them to be perfect. I draw these weekend traps because I want to notice when they're not.
Does that play in a similar time frame every Friday, or between a similar time frame every Friday?
Yeah. Usually on Friday you'll set your trap longs and your trap shorts. Sometimes you'll set your trap shorts on Thursday. But for the most part, your big move up, your fast move on Friday is a trap. The one that everybody falls for, the one that everybody says, we're going to have a great weekend, go long. Yeah.
But it's particularly in that same time frame.
Well, yeah, because CME closes at 5 o'clock, right? So this
and it wants
has to be set before that. And it has to be set with enough time to retrace so that your weekend trap isn't sitting
I think I heard you talk about it the other day, but I couldn't remember for reference purposes. You said you've been trading this weekend trap for about how long time span? How long has it been set up like this?
Years.
Oh, like how far back? Do you
as far as I can remember, like three to four.
Oh,
but
so
that's just because the bear market cuts it, right? So like during the bear market, you don't really get that tight of a control on it. You leave a lot of shit behind because those gaps are what give us the fuel for the pump up during the bull market. But during the bull market, these things tend to get taken care of in real time. So before the last 3 years or whatever, when we were at the bottom of the last bear, it was during the last bull market that we really focused on this. During the bear market, you want to really focus on momentum, right? That's when we start using our market Cypher more often. Just different tools for different times. Right now, market makers in control. Until this trap gets less and less traditional and we start to leave them back consecutive weeks in a row, market makers in control. And if you ignore market maker being in control, you tend to pay for it.
I see you reference the stock exchange sometimes in certain stock, like big stocks. How much of a role do they play on crypto?
A lot. It's liquidity. It's all risk on, risk off, right? So most of the time we're looking to see everything's tied on the 4-year global liquidity cycle, whether it's stocks, whether it's commodities, whether it's crypto, right? So we look at it as sort of like a canary in the coal mine. Right? Like what are the traditional markets?
I see what you mean.
We have some institutional, traders over here, but for the most part, the big money's being pushed around over there. So when they start to show, when they start to show a little weakness and they start to show a little sketchiness, then okay, if they're not willing to gamble on Apple, probably not willing to gamble on ETH.
Yeah, same aspect as how the market's in a bearish mentality has just been coming down for the past weeks. Same thing happened to crypto, correct?
Yeah, it's risk appetite, right? You're judging the risk appetite of the market.
So during your daily trades, do you reference the stock prices quite frequently?
In the morning, I'll come in and I'll check the temperature on everything. Right, if I'm going to be trading intraday, then I need to know what climate I'm trading in. Right, if stocks are retracing for the day, Bitcoin's retracing for the day, then I'm probably going to be catching dead cat bounces all day. And I'm not setting up any long-term trades. I'm just looking for lows and scalping. If everything is pointed up, and I'm starting to see some nice long-term setups on Bitcoin, then I start, then you can play it where you're having longer day trades where you're like, maybe you're in one trade all day long because everything is bullish. But if you don't know what the overall environment that you're trading into is, it can be dangerous. And that's for time frames too. Like you can be on the 15-minute right here and this look crazy bullish, but if you go on the hourly and we just double topped, and there's a chance that this is a higher low or something. It's important to know that. So it's just a bigger sort of, you know, with crypto, if you're trading alts, if you're trading ERC20, you have to watch Ethereum, right? Because Ethereum's going to control that movement. Well, if you're watching Ethereum, then you need to watch Bitcoin, because Bitcoin's going to control that.
It's
so
a
now
play
you're
on
watching,
play.
yeah. So now you're watching Ethereum, you're watching Bitcoin. Now you've got to look at Bitcoin dominance to see if there's any weakness in the alts again. If there's no weakness, then you have to go to Legacy. Okay, Legacy strong. You check the Dixie. The Dixie's dropping. You might check stable coins, and that's about where it ends, right? For Forex,
So about pretty much like a play on play on play on play.
yeah, for Forex, it's completely different. For Forex, you're looking at that same exact cycle, except if you're trading a minor currency, you're checking or if you're trading it's just, you're watching everything that you would watch in crypto, and then you're watching everything else. Like if you're trading cattle futures, you need to find out what the migration patterns are of certain birds that poop in certain fields, that make those fields rise, that make the cows go in that direction, that make a healthier sort of cow crop during El Nino years versus El Nino years because of barometric pressure and all of this. It's a lot, bro. It's a lot. Forex guys are insane. I was over there for a little while and I picked up some skills and some things that I brought over to crypto. But doing that full time, bro, is, yeah. I'm already doing 4 or 5 hours of research a day on crypto. Forex was a non-stop all day thing.
Oh wow!
It's just butterfly effect on steroids. Right? Like,
What do you do in the bear market? The bear market cycles.
I trade dead cat bounces and I do a lot of research. That's really when I set up. Most of my money's made in the bear market, even though it's
do you
not
switch
physically.
over to stocks or anything like that?
It depends. We might rotate into whatever happens to be hot at the time if there's something that's moving. We're always looking for plays during the bear market that will sustain themselves for more than a week, right? But for the most part, you're looking at short-term swings. It's real easy to take profit during the bear market because you know what's going to happen if you wait long enough. You know what I mean? Like, the direction is down. So, and then for people that short, it's great. For people that short, you catch a nice chunky short at the top. You know, protect it and ride it out.
What are your thoughts? Oh yeah, go ahead. Sorry.
I had a quick question that's on topic. So when you mentioned you assess the market, like the whole entire market, as far as stock markets too, when you start your day, how much time do you actually spend gauging the market before you're like, okay, I'm ready to make a trade?
I'm probably sitting at my computer for a couple hours before I do anything, unless something's just screaming at me. Usually I'm dealing with whatever trades I had that I left over for like overnight. And then I'm setting basically the tempo for the next day, for the environment for the next day. That's why when you see me, like, you guys, whenever somebody asks me for a coin, I'm pretty sure they're asking because they're in like a 5-minute trade or something and they want to know if it's, you know, time to TP or anything. But I automatically start looking at it from the weekly and then go down to the daily and the 4-hour. And it might be 5-10 minutes before I even get to the time frame that you care about. But I can't give you TA on the 5-minute if I don't know what the vibe is.
What's your favorite meal of the day?
My only meal of the day, dinner.
I literally haven't ate today either. It's pretty bad.
I haven't had breakfast. I can't even tell you when the last time I had breakfast. Nah, I don't trade leverage big. I mean, I'll probably be shorting ETFs and MicroStrategy during this bear market, but that's on legacy side where at least they pretend to have some sort of regulation. I'm not normal big. The Mexi screws me on a trade. I will be in South Korea at their headquarters pounding on the door, bro. I don't let people play with my money like that. So until we got some sort of regulation, I don't play those games.
When being screwed, are you talking about wicks or something else?
Yeah, you know, stop losses getting hit. You know, take profits being completely ignored. Entries being completely ignored. I've heard some horror stories, bro. I've been in this shit long enough to where I can tell you, I can't even count on both hands the amount of time that I've seen people with perfect trades perfect setups get completely wrecked through no fault of their own. Like literally, they did nothing wrong. And
I've
I
never seen
don't do
personally.
well with that type of shit, bro. I'll crash out.
I've never experienced any of that personally, aside from the wicks and on different exchanges in the past. But that's crazy about yeah, take profits not being
Bro,
triggered.
I've
And
seen people
stuff.
with
It's not
super
possible.
long-term trades that completely just racked off of some bullshit.
Isn't it Singapore, not South Korea, Dbloc?
See, I'd have been lost for months looking for the damn offices.
I'll find them for you.
That's another
I want
point. Nah, I need to be able to jump in a car and just drive. Like, you know what I mean? I don't want to have to get my passport stamped to go figure out what happened to my money.
I'll be there in 4 hours, man.
Nice. I'll just send you.
So I know you said you do a lot of research on the crypto environment. What's your thoughts and what do you know much about like Solana's like meme coin trenching and all that? Do you think they're gonna do that away? Because I feel like it's very like it's such a negative impact to the crypto market.
It's a bad look. You know, Solana went from being SBF's little, you know, golden child project that he pumped, that he sold. Because so what happened during the last bull run is FTX was selling Bitcoin. Sam was selling basically paper Bitcoin, like the Doge on Robinhood. You know, when you buy Doge on Robinhood, you didn't buy Doge. You bought an IOU for Doge, and it's not until you move your Doge out of Robinhood into a custody wallet that they go ahead and give you that Doge, which isn't wrong. You can do that, right? Because they have the Doge there, right? They've got a big bag of Doge. They just trade
Yeah, they have the
intraday with
asset.
IOUs. The problem is that Sam Bankman was selling Bitcoin that they didn't have. You'd buy a Bitcoin and then right on your portfolio it would say one Bitcoin. That Bitcoin didn't exist. Synthetic Bitcoin, right? And they were using the profits from that to pump Sol. And they were also using the profits from that to short anything that was a Sol competitor at the time. So Sol already had that stink. It got rid of that stink once it went down, lost everything, and then had its Sol conference, and they started talking about Dream Chaser and the 1 million TPS and all of that good, right? So Sol came back from the ashes. Right? This shit is impressive. It's faster, cheaper, but because of the faster and cheaper, it became a hub for the meme coins. Because what people don't like about Ethereum is that you can't throw $10 in a meme, make $20 and take profit because you got to pay $17 in gas fees. So it just kind of like created that environment, that extractionary environment where people came to Solana to extract value. And unless it loses that stink, I mean, it's going to have a ceiling for how high it can get. If I was Sol, I would be hardcore promoting any project that I have that isn't a meme coin. Like I'd be literally putting all the weight of the blockchain behind all the decent projects that they have.
There's no way they're gonna get rid of it then, correct?
There's no way to get rid of it, right? It's permissionless. As long as you're willing to sell a meme coin and I'm willing to buy it, there is no getting rid of it. They can't ban it. What they should do is put some sort of barrier of entry, right? There should be a dollar amount barrier of entry for one. I mean, back in the days to create a project, you had to have at least enough money to get it to hire a dev. Now it's all cookie cutter. It's all cut and paste shit. Like anybody can do
nowadays
it.
you just have to have so many amount of sold and you can open up.
So like you would look at it back in the day and be like, okay, dude spent $100,000 a year on this dev, and you know, chances are that it's at least somewhat of a serious project. But
and people actually have to do their research before they actually, you know.
When a 13-year-old kid can push a meme coin on pump.fund and pump.fund puts up the liquidity for the project because they're sniping it themselves anyways, you know, how do you stop that?
That's the beauty of crypto, though. No barrier to entry.
Well, it's what we like. That it's what comes with it, right? If we want something that's truly permissionless, with no barrier to entry, and truly like democratizes finance, then we're gonna get some sketchiness.
Yeah, and swear words in the ticker.
Yeah, we're gonna get some sketchiness. We're gonna get some idiots. Problem is that we've been paying so much attention to them. That's like social media, like I said the other day. You know, whenever somebody real annoying gets famous and you go in the
Yeah,
comments and they're
yeah.
like, damn, we made the wrong person
I,
famous.
I I felt the same way. It's like giving like serial killer names, you know. Like it's the same
Yeah.
mindset. I feel like
Yeah.
But that's on us. That's on
y-
us, right?
Yeah,
yeah, you don't
that's
want
what
to
I said.
identify them.
That part is
Yeah.
on us. That part is on us,
Yep.
which is what was
Yep.
interesting
Yep.
about this Yeezy coin. Because if we rewind the year to 2024 and Yeezy dropped that coin, it would have gone absolutely crazy. So I'm starting to feel like the market has lost the appetite for some of the nastiest stuff. Some of the more obvious liquidity grabs, some of the more obvious sort of just rage bait, you know, titles and shit. It's not doing it anymore.
I mean,
And
what do
I
we
would
do? Just ban
I would assume
this
it's not.
stuff?
Yeah, I would assume it's not doing it anymore because we've got so many blue chip projects at bargain basement prices. It's like you don't have to take on that level of risk just for ROI now. Right? You can go
Yeah,
into
but
actual real projects and still expect a significant ROI.
thing that's crazy is it's actually a whole trend. Like there's a whole category on Twitch of streamers that just do that all day long. It's crazy. They just snipe in, create meme coins, and just rug pull. It's a whole cycle that they do, and it's pretty dirty, you know.
It's the easiest thing in the world, unfortunately, bro. Right now, we create a Dbloc coin. I have a pre-sale. Give it to you guys at stupid low valuation. We drop it on Dex. Price goes crazy. Other dexes pick it up. Centralized exchanges start to pick it up. As soon as it gets on a centralized exchange that has futures, we sell everything that we got and we short that thing to the ground, and then we do it again next week. That's how it works.
Yeah, sorry, I meant to tell you. I already created a Dbloc token, and it's
Short that
a million people, already bought it.
You see anything with my name on it, short it immediately. It's a nasty game, bro. And
Yeah,
unfortunately,
it's pretty vicious.
unfortunately, like there's a lot of people in this game that really have no sort of morals or empathy. So to them, it's like, well, degens are gonna degen. If you're gonna buy my stupid coin, that's on you. Nobody told you to. But for me, it's more, and I agree. I agree.
Sounds
If
like
you're
the
gonna
banking sector.
degen. But for me, it's like just the effect it has on the industry. If we're really trying to get adoption up and we're in this for the long game, then we got to stop doing shit that is
I
gonna make
agree.
that
I agree.
take
Yeah.
longer.
Yep. It does slow down the process.
People got wrecked; they're not coming back, bro. You can't tell these people that crypto is not a scam, even if they know damn well that they were buying bullshit that they shouldn't have been buying. They were taking their buys off of TikTok.
Yeah, me and my friends, we talk about it. It's like the dream, you know. They're trying to buy the dream. It's very rarely happens, you know.
Yeah.
We just need smart people buying smart contracts. That's all we need.
Maddie, that's what I've been saying for years. NFTs took something that was non-fungible, right? A Pepe NFT. And we're going to give you 10,000 different Pepe NFTs wearing different hats, different canes, different whatever. And if you're lucky, you got the one with the laser eyes that everybody wanted. But then they smartened up and said, well, we don't have to do that. And it happened with Ape, right? Because Ape, everybody wanted a Bored Ape, but it got to the point that you couldn't afford a Bored Ape. So there was so much community that wanted to be involved that couldn't get involved. So they dropped Ape Coin. Not an NFT, not non-fungible. Every coin is just like the other, but it has Ape on it and it makes you feel like you're part of the community. And then now they just switched to all straight. So now instead of a Pepe NFT, you have Pepe coin. And every Pepe coin is exactly like every other Pepe coin, but you can just buy as many of them as you want. And that's what gives you your pull in the community. Not that you got the fancy hat, but that you have, you're in the top 10 wallets. What's going on, Raj? Meme coins are better than NFTs because, like I said, it's more democratized, right? The problem with NFTs, and we even did it in here. You could get the source code for these NFTs, and you could find out even on launch what NFT was coming next. And we'd be in here sniping all the rare NFTs, and it's easy to see. Like, all it takes is a little bit of knowledge to know how to do it. So it just wasn't fair, right? People would come in and snipe all the expensive ones. You'd end up with a bunch of bullshit that you could never sell. It would take a black swan. It would take. There's only one thing that's gonna do it, guys. Going into Mount Gox and then finding any gold in there missing at all is gonna send gold going absolutely crazy. But short of that, I don't think we get much higher than 3,500.
You said Mount Gox.
Did I say Mount Gox? I'm
Mount Gox,
messing
yeah.
up my freaking Fort Knox. God, that's a that imagine that's foreshadowing.
Yeah, they're gonna go into Mount Gox and find out there's no Bitcoin there. Oh wait.
That's
Yeah,
a
Raj,
phrase.
the world at $5,000 gold is not a world you want to live in. The world at $5,000 gold is getting very close to World War III. If it hasn't started already.
That oil at $150 a barrel.
Yeah, it's important to realize sometimes when we want these crazy, crazy prices, what that means for the world that we live in. Like people that they talk about hyperinflation and Bitcoin under super hyperinflation would be at $10 million. Like, you know what the world looks like? Yeah, your Bitcoin's at 10 million. You know what the world looks like though? You better stay inside.
Hey, Dbloc, I wanted to ask, when we have these like, time frames on the larger time frames starting to the 13 pop up above the 50, how long do we want to see the Bitcoin hold its price or where it's at before the EMAs will come up to where it's at to give it good support to continue to move up?
That's the problem, that the higher time frame that you use it on, the more time you've got to wait for confirmation, right? So it's using the 5-minute is for me like it's a compromise between speed and accuracy, right? So if I go to the 1-minute, I'll get really fast action, but I'll get a lot of fake outs. If I go to the 10-minute, I'll get less fake outs, but I'll miss better entries and exits. Right, so the higher you go up on an hour, you've got to wait. If the 13 has to cross the 50 and you have to wait for one candle of confirmation, then if you're on the hour, that's an hour you have to wait. Right? So use it on smaller time frames, and as it goes playing out, like I said, go up into the higher time frames and just get your confirmation that that move is still happening. But if you're looking for actionable triggers, that you have to go down to the lower time frame. Once you're in a trade, it's good. The best thing is when you get in a trade on the 5-minute, you've been in it for like 3 days, your 15 is above the 50 on like the 4-hour now, and you've got like no worries, right? You're just chilling out. You know that worst case scenario, you've got to wait for it to look bad on the 4-hour before it even starts to look bad underneath, because you're so far off of your trigger.
Speaking of lower time frames, could you real quick check out Sui? Because I feel like it's about to do something. You're gonna get mad at me because it does look a lot like Ethereum, but yeah, I don't know. I feel like it's almost done chilling out. I got it on the 1-hour. I feel like it's gearing up to do something to the upside.
So you got a little pump because Canary Capital filed an ETF for it today.
So he's got a very similar wedge that it's in, like Bitcoin does on higher time frames. where it's gonna have to make a decision here really soon.
That's exactly the line I drew. I
Yeah, our
connected the
top
other wick
trend
though.
and our bottom trend. We take off the extra wicks and just go body, body, body. So Bitcoin's in a similar sort of deal where it's gonna have to decide here real soon what's gonna happen. I like it. I mean, we are gonna have a bit of a slight retrace in my opinion. But the next time that we get up here, it should be time to go. Because what we have above us is a pretty big gap on the VPVR. Right? So this is that major node that we're sort of fighting with. Between here and 248 should be a straight shot. Right? Not a lot of resistance there at all. But the question is, do we go on this first one or do we, you know, we still have a little bit of time. So, I mean, we can just consolidate on this flat top ascending wedge
You
here.
think so? I don't know. I've been watching Sui, so it makes me feel good for you to say that. I thought it was about to launch here any minute.
I mean, it's looking strong. It can launch, but I mean, it hasn't had very good. It hasn't had a very easy time getting above that supply. Where is my? Yeah,
Man,
so
blog.
that supply is going to be an issue.
I don't know why mine looks different. I guess I'm on Femex. Or yeah, that's where I drew the line, was on the Femex exchange.
I'm
I
on
even
Binance.
connected like the bottom wick.
I just drew them all like willy nilly. I'm sure I could be more precise, but
I think it probably does look a little bit different. Like there's a price discrepancy because I'm on Femex Perps, like the actual exchange chart, but I was on the 1 hour and I drew them and connected that last wick, the previous wick, the previous high.
yeah.
Like from the price they're at now, I was able to connect that one with the other two lower highs from before, but I guess this is the Sui tether on Binance, so yeah, there's probably enough of a discrepancy where they just won't connect on this chart versus the other one. So maybe there's a bit of a bias there because it kind of, the way I have it drawn, it kind of looks like it already broke that line. A lot of times I'll even use the Binance perpetuals chart just to trade on another exchange, just because like it has, like, you kind of have a better idea of what it's going to do. Sometimes it's like 1 second, not a second, but like a half a second ahead of time, you know what I mean?
Yeah.
Sometimes if I'm on Femex, I can get like a half a second head start on a candle that's forming.
We're on the 2 hour rate, so 2 hours blown out. Last time we got up to break that sort of flag was here. What we really need to worry about is if we break out of this. Hold on, I'm trying not to die in real time.
Don't die. You get a pizza when you're supposed to French fry.
If we break out of this, we got to be careful of putting in this bull flag. Right? So if you want to break, you want a significant break. You want to get above. Because we could pop out and just put in the top of this bull flag.
Well, like, you mean bear flag? It looks like it.
Sorry, yeah.
Bear flag. Yeah, I could see that. My first sell orders, I have a grid placed, and I think the first sell orders don't hit until 42.45 or something like that.
So we've got a bit of competing patterns here, right? Got our bullish pattern, and then a possible bearish pattern.
Yeah, if that bear flag plays out, that'll be nasty. It is close to macro support though. If that played out though, it would definitely break that macro support zone. In which case, I don't care because let's see we get cheaper because I just want as much of it as I can get because I know it's going to be big. I don't know if you're trying to talk or not, but I can't hear you anymore.
No, that would take me down to where I want to enter, where I would like to enter. Right,
Okay.
that's my wish target.
$1.50, that'd be sweet.
The way that Sui broke out though, you guys remember when we had to draw these spider lines, right? We had no price action at all. The way that Sui broke out of these and just respected these spider lines, like literally for its entire run, are crazy. Gave us every top for the most part, and then all of our resistances on the way down.
Yeah, that's pretty accurate. How'd you draw those? You just connected them to the previous tops and then extended the lines, right?
Yeah, just spider lines, just traditional spider lines. We got to give it a little bit of time. Like I said, the 2 hours blown out, probably not going to have the strength to go get it at this point. There is a possibility that if we do get an influx, even though it's blown out, we pop and then retrace. And then you're able to get in at the same entry, but with a reduced RSI. Right? You'd basically be at the same entry if you played the breakout, but your RSI would be way cooled down.
Yeah, it'd be a retest.
Yeah.
After breaking that resistance, retesting it as support. The RSI cooled off. It's a better formula.
Well, I always say just wait for the confirmation. You will take less trades, and you have to be okay with some of them getting away. But if you're not catching the very bottoms and you're going to play breakouts, play the retest.
Yeah, I just don't want to be shorting it if it's about to rip. You know what I mean?
Yeah. I mean, just look at it like this. So this RSI got cooled off here. Excuse me. So by the time you get up to this break and you break out, your RSI is already topping out. Right? So just waiting, letting that RSI come back down and settle. And then getting in there with a cool down RSI is always a better idea. It's always going to make for a better trade. But like I said, you will take less trades.
Yeah, for sure. I'm not a breakout trader. I always get wrecked.
I like to trade it all. Like I always tell you guys, there's 5 different trades to take on every setup. And those 5 different trades are 5 different breakout, 5 different types of traders, right? Your degen on drops like this, they're gonna buy every wick, buy. One of them finally hits, right? Your first set. Second set is gonna wait for bottoming patterns. You're gonna wait for some sort of stopping volume candle. You're gonna wait for a cool down RSI, whatever your metrics happen to be. You're still catching a falling knife, but you're not doing it blindly, right? So that's your second group of traders is right there. Your third group of traders isn't going to touch it until they get a higher low. So they'll wait for this to come down. When they get the higher low here, this is where they jump in. That's your second or your third group. Your fourth group are your breakout traders. They're going to play the breakout of whatever pattern. And then your fifth group is the confirmation traders. I do all of it. I'll start catching if it looks like it's right. You know, sometimes maybe if I want to degen, I'll start catching some, you know, some big stopping volume candles or something. But for the most part, at the bottom, I'm in. Right. So let's say I did that, then finally found the bottom. I'm adding to my position here with more size. Then we get the higher low. I'm adding to my position again. Breakout, I might add a little bit more. Confirmation, I'll throw whatever's left. Whatever's meant to be in this trade that wasn't in this trade yet gets dumped in at that point.
Yeah, it's a good strategy because by the time the pattern's even before it's even played out, you've got 4 places where you've made really good entries.
Yeah, there's times where the pattern doesn't play out at all, and I'm still good. Right? A failed breakout like this, like let's say that this doesn't break out and it goes, well, it ruined this trade, but I'm still taking profits on this one, and I'm still taking profits on this one. You know what I mean?
Right. Yeah, I mean, even if you had your stop loss below where you just drew there, the breakout, then if the trade goes bad, at least you're only kind of getting stopped out on those the breakout and the confirmation trade, but you're still in big profits from those lower entries.
Yeah. And it just gives you more sort of leeway on different options that you can do when the trade goes bad for you. You're not scrambling. Stormboy says, what I hate about higher lows is that you never know it's actually a higher low or a fake bounce. Yeah, that's why our stops get put really tight underneath those. I mean, I guess that's another aspect of it that I didn't mention, right? Like, when I take this trade here, my stop loss is a couple of ATRs underneath, assuming that there's no massive liquidity underneath, right? When I move my trade to here, when I add to position there, I'm also moving my stop loss. So it might not be much, but I'm locking in those gains right there. Those gains right there can't go anywhere. That's already been locked in. And when I play the breakout trade, then I do the same. I set my stop loss underneath the breakout trade. And then that's what's going to get caught. If we come down, like times like this, I wouldn't have taken profit or anything, right? If we come down and we don't get that high and we clip, then that's fine. It's done. You know, I'm out. I got this part of it. On to the next.
So another thing I like to look for with higher lows, it really increases the probability of identifying a higher low if there's a hidden bullish divergence, and you know that there's at that exact price.
Yeah.
If it falls below there, the hidden bullish divergence is invalidated. If it falls below that price,
It was very simply too looking at volume more than like, did anybody buy when they got to that higher low? You know what I mean? Like just very simply, like,
yeah.
Is there any interest there or not? But yeah, divergences, of course, help as well.
Yeah, volume is huge.
In my opinion, volume divergences are almost more effective than RSI divergences when you're talking about inner trade, low time frame sort of ideals. Just the fact that you know that you're volume divergent here.
Like now?
Yeah, like right now we're volume divergent, right? So just drawing your trend line down and knowing that one or two things are going to happen. If you don't get a green volume bar that breaks that downtrend soon, volume will come to clear that divergence. I mean, price will come down to clear that divergence.
Right. Dbloc, as a general rule of thumb, what's a good percentage to have your stop loss beneath? Like if you had a trailing stop loss, what would be a good percentage to keep it at?
I like to keep mine tight, bro. Me personally, I'm typically between 1.5 to 2%.
Right.
That keeps me out of the hope part of the trade. Right? Like if I'm right, I'm right. If I'm wrong, I'm out. If I'm right, there's no reason why price should go 2% underneath where I consider the bottom be. That's a completely different setup now. But that's, I mean, that's subjective, right? A lot of people have different, I don't know if it's risk tolerance or maybe they want to add a little bit of a gamble, right? Add that little bit of, what do they say, a little bit of room for God to work.
Well, and also if you're marketing in, you know, got high fees, you don't want to get stopped out over and over and collect those fees.
But you got to take that into consideration, and you got to put your stops in even tighter places where you're protecting that.
Yeah.
People, how do you degen into a trade? Like when you see the falling knife and you're like pretty certain, but you're not 100% certain. Like you said, you're like layering in your buys. Trying to
You
catch
know
that knife.
what makes what I consider a degen trade is a trade that you take that is not based off a technical. Meaning, it's usually a hunch. It's usually a feeling. It's usually something that you can't put your finger on, which is why I don't want people to degen, because that shit takes a long time to even develop the sort of instinct for when shit like that is happening, right?
Yeah, for sure. I agree.
But
it is intuition based.
Yeah, some of it is really hard to like. Doing this channel and this group and being in Discord for so long, it really has helped me put a lot of the things that were unspoken into words. Just shit that I learned, but I've never had to say out loud to anybody. But there are still some things that are hard to explain. Like, it really just is a feeling sometimes.
It's just, it is what it is. You know, some people are meant to be, most people aren't, just only a small amount of people are meant to be Jedis. You know, it is.
It's just like, it's like anything else, bro. If you grew up in a bad neighborhood, anybody here that grew up in a bad neighborhood, you know that feeling you get where the room turns?
Yeah.
Where just the vibe gets off for a second, you're like, all right, it's time to go.
Mm-hmm.
That's not something you could teach to people. Like, that's something that happens with experience. It's the same thing with, the same thing with trading. There's been plenty of times where I'm like, all right, we're out. It's time to leave. And like, what's going on? Just trust me, bro. It's time to leave. The temperature is shifting.
I've noticed for myself, because I've been trying to figure it out too. Like, when do I get that feeling? And for me, it's like an energy, but it's like violence. You know, like if I see violence going on, then like I know it's either gonna be a fake out type of thing, or if I don't see violence, if I don't see that energy, then I know it's just rolling over, man. It's not doing what I think it's gonna do. I need to see violence. I need to see action, and then that tells me something's about to go down.
Yeah. Could be
Like, I
anything,
don't
man.
recommend-
Sometimes things are too quiet.
Yeah, like I don't recommend trading based off of intuition for anyone, by the way. But I
Yeah,
was
me
a little
neither.
bit curious.
Me
bro.
neither.
Yeah, that's basically gambling.
Nope.
But I was curious, like, how do you manage your risk in a situation where like the moves are violent, right? And it's basically the bottom, but
Well, for me, if I'm gonna start swinging, right, it's usually under the idea that if it goes wrong, I'll consider that a DCA. Right. So these
where do
really
you like
tight,
draw the line, right?
like these really tight ones, like I won't have stop losses for this. I just decide
Exactly.
during the dip when it's time for me to start DCing or when it's not. If it happens to catch, it happens to catch, and then we go into this mode, right? Let's say this happened to catch, then I would have gone in on the secondary, on the lower high, I would have added more to the position, and then we would have built that out. But when everything really starts to line up, right? When I start to see volume candles at the bottom, when I start to see the RSIs lowering out, when I start to see us getting close to macro support or something, then that's when I'll find where naturally by TA the bottom should be, right? That's where everybody knows. Everybody knows underneath this wick, you don't want to be underneath this wick, fine. The problem is you can't set your stop loss underneath that wick or it's going to get hit because everybody else's stop loss is right there. So then trying to figure out how many ATRs or whatever metric you want to use, how many percentages underneath the everybody line is what I call it. Right? The everybody line is where everybody's got their shit set. You don't want to be in that bunch. And then as you go getting more confidence, you can go, you know, bringing that up and locking those gains in. Putting your stop loss and profit as soon as possible is one of the best things you could ever do. I don't care if it destroys all your trades. I don't care if every time you put your stop loss and profit, price comes down and drops you out and keeps going and damn, I only made 5% when I could have made 50. You do that 100 times a day. And you tell me where you're at the end of it. It's all about the gains, right? It's all about consistent wins. And then the money comes secondary. If you focus on your win percentage, the money is inevitable, right? If you focus on the money, you make really stupid decisions. Right? Money makes you emotional. But win percentage is easy. Win-loss. Was I right? Was I wrong? And yeah, exactly. Like Irvin said, you know, every once in a while, boom, you do get that big one. And then it's like, holy shit.
What's your take on when it comes to risk, like trading rules for risk and losses?
I mean, I don't like to see anybody trading underneath a like 1 to 3. Like risking $1 to make $3. 1 to 2, I guess, is okay if you're a little bit more experienced, but you got to leave yourself a bubble. You know, the amount of people that don't understand how to calculate their risk, yeah, it's kind of bugged out.
What's your typical RR for your trades? Your trades.
Mine's are kind of higher because I really do wait for like really good setups. So like a 10 to 1 isn't rare for me on my setups. But I wait for it, right? Like, I'll give you the perfect opportunity. These guys here couldn't wait to short this move. These wicks right here, they couldn't wait. So the trade that they took with having a resistance right there, right? The trade that only logical, safe place for them to have set their trades up would have been to enter their shorts right there. Let's say they're shooting for the bottom of the range. Let's say they thought we were going to double bottom. They wanted to shoot for the bottom of the range. The only safe place for them to put their stop loss would have been above that resistance. Right? Unless you're just degening. That's the only safe place to do it. That's the only place that they could have put it that they wouldn't have gotten stopped out. Right? Which would have given them a 2 to 6 risk reward. Which in my opinion is horrible. When if you just wait a little bit for the setup and you get that impulse above resistance, and now you can set your short in this area. Hold on. Now you're setting your short here. And your stop loss is in exactly the same place, right above resistance that it would have been before. But when you drop your take profit, you're looking at a 7 to 1, 8 to 1 risk reward. See what I'm saying? So it's a much better trade. Even if it goes wrong, you can do this all day long. You know, risking $3 to make $7 and you have a positive win-loss, you know, the money is just going to come. Problem is if you're taking bad trades, taking trades too soon, not waiting for setups, getting too emotional, not understanding where your ranges are. Yeah, the bigger the better, TM. Shit, my gold trade was a 76 to 1 risk reward. And it went way past that. Oh, okay. I got you. I would put the probabilities of him. Well, nobody can put the probabilities of him getting liquidated, right? Because nobody knows the probabilities of him leaving the trade. But if he stays there and doesn't move, I give it higher than 31%. I think it's almost like a 65% chance that we hit 85.6 in the next couple days if we don't do it now. With the current setup that we have, right? Unless things start to look different.
The 30-minute moving averages look really good. So does the hourly, but I'm just wondering if they maybe, give us one last shove down before a nice spike up.
Well, I know one person that's invested in that happening. I know at least one person on the planet wants that to happen with you, bro. That whale is dying for a retracement here.
But not a deep one. Maybe just to like 83.35.
I would have to assume at this point, and again, it's hard to kind of put your mind in the head of these degens, but I would assume if we come back down into the mid 80s that he's gonna TP on his short. I don't know if he wants to really keep playing this game. He's survived 2 assassination attempts, and both of them have double topped off the same area, which to me tells me that he probably has supply sitting here, and he's defending his position with spot sales. But whether it can be absorbed or not is what we've got to figure out.
Does that mean we're back to the drawing board and try to find a new strategy?
Yeah, the whale's entry price is at 83,898.
Yeah, I would assume that he TPs if we do get a retracement to that level, unless he's just an extra level of degen that I haven't considered. Yeah, maybe this guy really is Trump, bro. He's already survived 2 assassination attempts. He's still pounding his chest at the world. Might really be Trump after all.
You talking about the CBB dude?
Yeah. Now the guy that they're hunting, the whale guy.
Wait, so I thought we were asking Eric Trump for help to get the whale.
Right.
So Eric Trump going after his dad.
That was funny as shit. This whole thing has been highly entertaining. I'm just glad most of us are on the right position of this trade so we can like laugh it up, key it up, and everybody's not in their feelings.
By the way, that move that happened over the weekend, moves like that are a lot harder to pull off during the week, correct?
Yeah. You want market maker to be off duty to pull this type of shit. The market maker algo doesn't really decide whether it wants to match or not. When orders come in that need matched, they get matched. So market maker being on duty during this could have made this different. Could have easily said, nah, you guys are going to have to push that by yourselves. Could have gone much higher, right? If market maker, if the algo didn't match the trade, excuse me, and he had to hit the books, then it would have gone much higher, right? They wouldn't have been able to buy that amount of Bitcoin for the price they bought it without pushing price. Would have probably been a better chance of actually hitting the guy, to be honest with you. But remember, at this time, he was down here. As this started breaking out is when he moved this position up, which is kind of what I'm expecting. I'm waiting for the news that he's moved this position. If we break this resistance, I'd say there's probably a 60-70% chance that he moves his position. Again, I'm just assuming that he's got a brain and that he's not completely degenerating, right?
So for the guys that are trying to hunt him down and get him liquidated, what market would be the best market to do it in? Like the London session or the Asian session?
I mean, they tried it during the gap, like I said, and they couldn't get there. So for me, honestly, they're just trying to swing. They don't have enough money to swing at the guy they're trying to swing at. So if it was me, I would say let's do it during US. Let's do it during US when it's volatile. Wait for US to give us a big swing up so we don't have to go the whole way, and then hit them. Which is, what time was it? That's basically what happened. But we've got to wait for regular market hours, right? We've got to wait for tomorrow and see if they. The next opportunity that you see whales take are, like I said, during the dead gaps. So between now and Asia Open is a sort of window of opportunity for them. If they have enough money where they don't need liquidity to be provided, they can push it now without any sort of resistance.
That's what's up. I want to help them.
You and everybody else, bro. You should see the comments, man. You go into this dude's page. Like, look, hold on, where are we? Look, this one, like the last one he posted with the guy, like everybody underneath him is like, finish him. Everybody's eating their popcorn. Look, Putin on a bear. Could
That's
never.
hot. So now everyone's so
Whales
angry about the
exploding.
Bears. But for so long, everyone's hated the Bulls.
Yeah, you know how it is, man. People just want somebody to rally around. The same way I say that, like, traders love a target that we can all sort of aim towards. The same sort of deal. This just gave everybody like a CME gap that didn't exist inside of a CME gap that already exists, with a little bit of lore attached and entertainment.
This dude's like a modern day Robin Hood.
The dude trying to get him? Or the other dude? Depends. We still don't know the intentions of the whale, bro. Honestly, it really could be a big spoof to try to get price away. What whales don't like is when other whales are very obvious, right? That's why they're calling him a rogue whale. They don't like for you just to throw your money around like that all aggressively, so you tend to get targeted by the group. But maybe that's the point. Maybe he was tired of waiting. Maybe he's like, look, I got great buys at the bottom. I'm not trying to go through this shit again. Maybe I can start a little bit of FOMO here. Or start a little bit of push, you know? And then think about the double. Not saying this is happening. It's just a thought experiment. But if that is the plan, then it's a double-edged sort of W, right? Because he's getting bulls to push price up away from the bottoms, but he's also ensuring that when he gets clipped, there's a half a billion dollar market buy coming in. Right, so he's also adding to the pump by getting liquidated. And if he's got big leverage trades that are set up in separate wallets that aren't as obvious as this one, then he's going to eat just fine off of the whole move.
Yeah, he's just playing. So, it'd be like he's just playing the villain for everyone to rally behind.
He's just playing the other whales. You get him to do what he wants, getting them to move maybe before they wanted to.
Must have read that book, The Art of the Deal.
That'd be one hell of a move, man. I don't know. Sometimes I think that sometimes I think I give these people too much credit. But then at the same time, I'm like, well, why not, right? I'm sitting here in front of a computer and I thought of it in 15 minutes. Like, what makes me think somebody with way more money hasn't been plotting this for a while, waiting for the perfect time, perfect environment to do it in?
Man, I'd love to know a whale just so I can ask whale questions.
Hey, Dbloc, how do you measure the move of the W?
The largest, the left side of the W would be your measured move. And so you take from the bottom of the left side of the W to where the neckline and then you place that at the break.
Got it. And then when is the W invalidated?
When it breaks underneath the lowest, the left side, right? You've got your W here. If price comes down and you put in a lower low, then the W is invalidated. You can come down here and consolidate. You can do all that. None of that matters. But if you don't take out this low, taking out this low is what gives you your invalidation. Until then, the measured move is valid. And remember, measured moves only pave the road. Right? Just because there's a W and it has a measured move to 85 doesn't mean price has to go there. What it means is that's the path of least resistance. Right? Retail's on board with that path. That road's already paved. Now you've got to find the gas to get there, which is your liquidations, which is your large market orders. So you have to put both of those things into consideration. You could have the perfect road paved. If there's no gas to get there, you're not going. And you could have all the gas in the world, but if the road hasn't been paved, then you don't have retail on your side. So it's really a mix of both. And market maker uses that to his advantage very nicely. It's not a coincidence that most of the times your measured moves take you right up to the end of liquidations, or right up to the end of the the 50 and the 100x's. It's also not a coincidence that at the bottom of every pattern, for the most part, you see market makers step in. If you wanted to build a W pattern, when would you have to step in to build a W? You'd have to stop the price at the bottom. You'd have to stop the price again at the top. You'd have to stop the price again at the bottom. Right? That's how you create the pattern. And it doesn't cost them a lot of money to do it, right? Because natural price action takes over in between. I've got to dip off and do some research because I am severely delayed right now. We're good, like I said, until we invalidate this W. You really want to stay above this SR flip and this 50 for the most amount of bullishness. Make sure your EMAs are all facing up on this push. And if we break this high is when you should see the next explosive move. We've got resistance. We've got this purple box is also resistance. So it's not going to be an easy move. We want to try to build up as much sell side liquidity as we can. But that's the play for right now. I'm in the office. I'm just going to be on the other computer. So I'll be watching in case anything crazy happens. I'll be back, y'all. Trade safe.
Yes, sir.
That's right, boss. We will.
All right, now it's time to get into some shenanigans.
That's right. The teacher has left the classroom.
Let's trade some illiquid low cap shit coins.